Good afternoon, traders. It's about noon on the 28th of December, and the first thing I'm going to talk about is crude oil. In this video, I'm going to be going over the broad markets and some compelling ETFs, but I'm going to start out with this. Ex-Shell president sees $5 gas in 2012. And I'm going to link this article in the description. Just go ahead and click it, and you guys should definitely read this. It's very important. This is a very respected man in the oil business. Taking a look at crude on a daily time frame, it's still in this rising uptrend, and it's not really pulling back at all. The 5-day moving average is still ascending. Over the last 4 days, we've had a big consolidation, but if we break out above this, I can assure you that 95 will be the next level, just like Goldman Sachs called for. They said before year end we would approach 95. Now I don't know if that will happen, but certainly we could be looking by mid-January for 95 a barrel oil. Looking at the 1 hour time frame, we are still bullish. There's nothing telling us to sell, and we still have a rising 50, and we're above the previous high that we put in 2 weeks ago. Looking on a 1 minute chart at crude, we're getting a print of 91.32 right now. That's where we opened today. Remember, I said if we get over the open, the sentiment then turns to bullish. Now they've been trying to hold it below the open the whole day, but now that they poked their head above the 91.28, now we're looking pretty bullish. So I might look to maybe buy a few contracts of crude oil if we hold this level today. So we'll look at it later on, and there's a good chance we get up to 91.50 or even 91.60 before the close. Next, we're looking at gold futures. And you know, everybody on TV, especially Fast Money, I don't knock anyone, but they were all saying they're very bearish on gold, and they wouldn't be buying up here. They felt it was a better short. I don't believe that at all. Just like the market, you'd be a fool to short it up here. There's no signs. When the market comes to a correction, you will know, because the complete trend in the sentiment will switch very fastly. That's what happens on low volume rising markets. I know everyone's psychology is messed up right now because they feel that the market just keeps going up and they can't grasp to buy it up here, but there's still value plays that you could get in. You just need to buy them on weakness, stocks that you really like and that have strong fundamental balance sheets. So anyways, back to gold futures. This I gotta change this. This should be 14.24. That's the high that we put in right there in November. And then we put in the 14.32, which confirmed a higher high. Now we sold off a little bit. I wouldn't even call it that. I'd call it taking profits and bullish consolidation. We went to the 50. They try to bring it down. This trend is still very strong. They got it back above there. We broke above the 20-day moving average today, and the 5-day is ascending. Right now we have a PPS buy indicator. So short term, we will look to buy crude on dips. Something I was watching yesterday was GG, and I didn't buy as much as I wanted to, but I did buy some calls right at the low. And my reasoning behind that is I was watching this 44.23 level right here. I'll draw that across, okay? And then I was watching the previous low. And if you guys have been watching my videos, which most of you have, you see that my strategy is to buy when we poke back above the previous low, which was right here. And that's where I bought my calls at. And then today I just got lucky. I wasn't looking for this big of a move so fast, but sometimes we get blessed. And right now we're still bullish on this. We are above the declining 50, which could start ascending in the next few days as long as we hold above 44.84. Now I purchased the January 45 calls at 86 cents, and that was right around here. and they're currently trading at $1.37. I only have 4 contracts. 50 cents profit on 4 contracts is $200. Now, should I sell it here or should I hold it? Well, what I'm thinking is I may take 2 contracts off the table, but I'm going to leave 2 on. And my target is around 188 for GG on the call side. And my stop will be at 94 cents. So no matter what, I'm taking some profits off the table and letting the house's money ride. Quick look at the ETFs. Gold miners are ripping. That's because gold is up. And looking at the 1 hour time frame, we have this declining downtrend that we broke above, and we're above critical levels right around the 59.92 and the 50 starting to ascend. So we're still bullish on this. XLE, which is the energy sector ETF, continues to go higher. We're pushing above previous highs. That had been a major support level since we broke above it and made that high at 67.49. So energy sector is still strong, and the next resistance level is at 68. Okay, so next we're looking at IYR, the REIT ETF. We have this declining trend line that we broke out of, and we consolidated above the major 55 level, which is bullish. Also to mention, we had all these moving averages right in this area, the 50, the 20, and the 5, all consolidating, and we got a bullish divergence. We got the 5 that crossed above the 50. Now all we need to do is see the 20 cross above the 50, and that will declare a strong uptrend, and we could potentially look to retest the previous high and make a higher high of 58. And you guys just need to look at the REITs right now, because SP actually went down from 103 to 94 fairly quickly, but quickly regained its composure. And we weren't watching this, because if we were, remember, we made the low, then we made another low, and we snapped back up. We would have been taking our long around 95 and made a quick 5 points on it. So anyways, for SPG, if we hold above 97.71, the 50 will continue to rise up on the 1 hour time frame, and 100 will be approached. So I believe I could be interested in buying this SPG around 97.71, as long as we could come down and bounce off it. XLK, which is technology, is basically just consolidating in a tight range, pretty much a 30-cent range over the past month, you could say. And we really need to break above this 25.33 in order for us to get some momentum to push higher. That's why you see the small caps going up, because a lot of the big boys have already had so much money put into them, they're kind of at a standstill. Material sector continues breaking out of higher highs. We made a fresh one today at 38.36, and the trend is still strong. Again, XLY, another one, very, very tight range. And what happens when you're approaching a top, you usually see lighter volume on the up moves, and then the violent down move will come all of a sudden. So that's how I think our correction will start. There's going to be some kind of crisis, some major news that brings us down. So my advice in these markets, if you're actively trading them, would be to set a stop on every position you own. I don't think anything's going to happen before the first week of January, but when it does occur, we are going to be ready, because we're going to get a lot of our short positions of stocks that have just ran up massively, and those will be the ones to go down the fastest, because people will then start taking profits. The ag sector moving higher again today. Some of these stronger stocks, or these smaller stocks like Seed, you see amazing move. GRO, another amazing move. Feed, the feed could start going here. $3 could be in the cards within the next month. Monsanto, as you can see, it's breaking out again, and I know you guys saw when I was long right in here. I got long at 62.5, and then we had this down move and they shook me out. I took a loss on it, but then they snap it right back up 6 points. So it's trades like this you got to look back on and just be patient. In this business, it's all about your entry and your risk management. On this trade, I showed poor risk management because I purchased it at the wrong time. Home builders right here, XHB, basically just consolidating, and the 5 days starting to turn down a little bit. We could approach the 17, and if that happens, that PHM, which is the most interesting home builder I saw thus far, that could pull back a little bit, and that could potentially be a buying opportunity. XLP, which is consumer staples, just put in a lower high, and we got a sell on the PPS yesterday. The original high was 29.58, and then like I said, we made the lower high. We have a declining 5, and we need to really hold below this November the 4th high of 29.27, and if that does happen, we'll start looking for the 20 and 50-day moving averages to act as support. Utilities are bullishly consolidating. After the high we put in October of 32.40, we've been in a downtrend since then. So right now we're consolidating under the 50, but you need to note that we have the 20, the 100, the 50, and the 5 all in a little area right here. So what's going to need to happen is if we could get above and hold 31.50, we will look to approach this 32 level fairly quick. And we still have a buy indicator on the PPS. XLV, which is the healthcare ETF, is basically just neutrally consolidating. I'm not very interested in this at all, so I'm not going to give you my opinion. We have been making lower highs on the daily, so there is a good chance we could approach these 20 and 50 moving averages. And we do have a positive little divergence here because the 20 is crossing above the 50. So if we pulled back, it would be healthy, and maybe we could break out of new highs. One healthcare stock that we follow is MHS, and I showed you that yesterday we were approaching a key support level, and right now we just made a higher low. So the trend is starting to get a little bullish, especially if we hold above this 61.85 level. Basically all this is short covering from the people that shorted the top from 64.24. So if the shorts could start covering a little more, maybe we could get our move back up to 62.12. Now I wouldn't recommend really buying any options on this since they're not very liquid, but if you want to day trade this, you could make some probably easy gains. Maybe buy a small amount of shares in the morning and just let it ride over the next couple days. Retailers, basically another one, just consolidating, but the consolidation is bullish. We're still rising. We just made a new high last week of 107.13 on Thursday, and we still have an ascending 50 on the 1 hour. So as of now, we're still neutrally bullish. As long as we continue to hold the 20, we should stay strong. But also note that the retail stocks have already had all of their prices baked into them. They bought the news, and now they're taking profits after the season is over. One stock that doesn't seem to be very tired is KSS, which is Kohl's, and the 55 calls are very active today. Once again, we're consolidating above the 50 on the daily time frame, and we just did something I like. Look at this. This is a major level here around 53.50. Not only is it a previous high, but it's also a gap up. And then we've been consolidating, and look at this. This is our signature move. We make that low, then we come down. They try to break it here and try to lead it down to the 200. That didn't happen. They snapped it back up, and now we're looking bullish. So I might actually buy some calls of calls. This cyan color line right here is 53.93. Put this price level on your charts. We need to hold above this, and if that happens, the 50 is going to wrap around and we'll approach 54.5 to 55 quick. So this is one of my main trades right here I'm watching. Now we're looking at the telecom sector, and it's had another amazing move. This thing doesn't move fast, but it's a very secure investment, and a stock like Verizon, which is my favorite, pays a decent dividend. And Verizon reports on January 25th, but we continue making higher highs each day. This is a very low risk trading stock right here. 35.18 is our line in the sand. If we pull back, maybe you could day trade this thing. It doesn't move, like I said, it moves very slow, but if you can make 10 cents a day off it, that's $100. And last but not least, we're looking at the IYT, which is the transports ETF. Once again, we're in a consolidation just like everything else. We're not really moving. We still do have an ascending 20, and we put in this high at 92.72. So unless we break below the 20 and get some volume coming in, or break above 92.72, we're just neutral on this. And we need the volume to go up for any of these ETFs to start making trend reversals. Good luck trading, guys.